Good morning, everyone. Welcome to our self-directed IRA and solo 401k Q&A session. Just want to quickly make sure that you all can see me and hear me okay. So if that's the case, if you can just respond with a thumbs up, I would appreciate that. But my name is Natalie with Sense Financial, and we are going to start um, going through the questions that were submitted ahead of time. Um, and if there are any additional questions, please submit them or type them up in the Q&A section, and we will answer them today. But today, Dmitriy Fomichenko will be answering all of your questions. Dmitriy is the president and founder of Sense Financial, which is a boutique financial firm specializing in self-directed retirement accounts with checkbook control. He began his career in financial planning and real estate investing in 2000, and he owns multiple investment properties in various states and is a licensed California real estate broker. Dmitry also holds a designation of Certified IRA Services Professional from the American Bankers Association. And over the years, he's taught hundreds of investment and financial planning seminars and mentored thousands of investors. So thank you for joining us today, Dmitry, and for taking the time to answer questions.
Natalie, thanks for hosting this, and welcome everyone. Looking forward to answering your question. We got some really good questions there submitted, but as always, think about the question that you can ask and type this in a Q&A. And remember that someone else will benefit from your question as well. It's not just for you. Other people are also learning. So keep that in mind and get those questions in. There is no such thing as a stupid question. You might think it doesn't maybe make much sense, but go ahead and submit that anyways, and we'll give our best to give you the answer.
Yeah, we will go ahead and jump right in. So our first question is from Chuck. When the participant in the solo 401k account that has purchased the property dies, must the property be sold? Does the property step up in value, and can it be rolled over into a new 401k to any of the heirs?
Good question, Chuck. So when the participant of the 401k passes away, the property remains in the 401k or in an IRA for that matter. And there is a beneficiary that is designated. IRA participant and 401k participant designate a beneficiary. And when the account owner passes away, the beneficiary will inherit the IRA or 401k. And if it has alternative investments such as property, then the beneficiary will need a self-directed IRA or 401k to accept that, because the account will have to be retitled and converted to inherited IRA. And the property doesn't have to be sold. It can remain in the account, but you will have to follow the rules and the distribution. There's going to be a required minimum distribution if it is inherited IRA, unless it is from the spouse. So that will be the answer. But it's a good thing that you're planning for it and thinking about this ahead of time to make sure that the transition is smooth.
Our next question is from Veronica. How to obtain non-recourse loans, mandatory disbursements on properties purchased with IRA.
Veronica, if you wish to purchase a property in your retirement account, the property can be purchased with cash in your 401k, but it also can be financed. Now, when you finance property inside of an IRA or a 401k, because you are considered a disqualified person to your IRA or 401k, you're not allowed to provide a personal guarantee. Therefore, the loan must be non-recourse. And non-recourse simply means that there is no recourse against yourself, against you. The only recourse is the property. That is the only security for the loan is the property. most banks that are out there do not offer loans like this. You do need a lender that specializes in non-recourse financing, and there are about a dozen of them out there. We do have a list on our website. If you go to SenseFinancial.com, and then you'll see that under both solo 401k and checkbook IRA, on the drop-down menu, you'll see a list of non-recourse lenders. Go there, review it. Each lender has unique programs. They're a little bit different from each other. Some vary by significantly, some by a little bit. But review those lenders, and depending on what type of investment you're making, whether it's a single family property or a commercial property, there might be a certain lender that will fit you better. That list is a resource for you. We don't have any affiliation with those lenders. They're just there. We assemble that list for you as a convenience, as a resource for you. Typically, the lender will require 30 to 40% down payment on the property, and about 10% of reserves, 10% of the purchase price as a reserves. You must have enough funds in your retirement account. So again, if you're looking to buy using leverage, you need probably between 40 to 40% of the purchase price as a total. As far as the mandatory disbursements on a property, there is no mandatory if you just buy a property using leverage. There is RMD that kicks in once you reach required minimum distribution age, which is, I believe, now it's 73, but not specifically for properties that are purchased using leverage. So it is age attached to an age, and it's regardless whether your property is financed or not. Once you reach certain age, then you will be required to take required minimum distributions.
Okay, our next question is from Charlene. How do you best maximize solo 401k plan?
Well, there are a few ways that you can maximize a solo 401k plan. One of the main benefits of the solo 401k is the ability to make large contributions. So for those people who are self-employed or own a business, and they're doing well financially, they're making good income, it's a great tax shelter because it allows you to shelter almost $70,000 of your income from taxes per participant. And if you're involved, if your spouse is involved in the business, then you potentially can double that. So if you together with your spouse can contribute over $100,000 of your business income or self-employment income from taxes, you probably will be able to lower your tax bracket, and you're going to be paying a significantly lower amount. So you can potentially save $10, $20, $30, $40,000 on taxes. So that's certainly one of the ways to maximize that. And then in addition to that, you can have the freedom how the funds are invested. Many of our clients invest in real estate or do some kind of real estate related investments such as private lending. You can invest in various funds, real estate funds, note funds. So the beauty of that is comparing to the conventional retirement accounts where you are, or your investment choices confined to the stock market. With self-directed solo 401k plan, you have the ability to invest in alternative assets. You can invest in private business that otherwise is not publicly traded, but it is available. We have clients who've done it. You can invest in cryptocurrency. You can invest in precious metals. You can invest in real estate even outside of the US. We have clients who invested in South America, in Canada, in India, in Japan, in Europe. So you have those opportunities. And just one, actually a client who called me this morning just had this idea. He said, well, now interest rates are high and the activity is a little bit lower. He was thinking there are people who have money in retirement accounts, maybe from the previous employer, and they want to invest in real estate. Maybe they cannot finance. Well, they can use the retirement accounts. So again, review the list of the benefits on our website on the Solo 401k. Keep attending our webinars, and there are many ways to maximize your Solo 401k, but those, I will say, the main ones.
Okay, yeah, next question is from William. He would like clarification on TIN versus EIN employer on the Form 5500 EZ and Form 1099-R.
Good question, William. The TIN stands for tax ID number, and EIN stands for employer identification number, and essentially that's the same thing. It's a tax ID number, and the tax ID number. Remember that your solo 401k has its own tax ID number, and your business has its own tax ID number. When you're completing Form 5500 EZ, the form asks for the tax ID number of the sponsor, the employer. It does not ask for the tax ID number of the 401k. Again, it's clearly defined in the instructions. If you go to the knowledge base and look at the instructions we have available for completing Form 5500 EZ, and if you just look at the form itself, it asks for the tax ID number of the sponsor, not the 401k. However, when you complete in Form 1099-R, then the issuer of the form will be your solo 401k, and that's where the tax ID number of the solo 401k must be listed there.
Our next question is from Pamela. Do solo 401ks need to enroll into this new BOIR, or just the business attached, or this or that established the 401k?
Good question, Pamela. If the new the BOIR stands for beneficial ownership interest reporting, and that applies to any business entity that is set up or incorporated in the state, and usually that's LLC, partnership, or a corporation. 401k is a qualified retirement plan, so that's not part of that requirement. But for most people who have solo 401k and they have incorporated business, whether it's a LLC or a corporation, then the sponsor of the 401k will be under that obligation to complete this report, not the 401k itself. So it doesn't apply to the qualified retirement plans, it applies to the businesses. So again, if you have LLC or a corporation that is sponsoring the 401k plan, then that entity, or you must complete this report for the entity. Now, it's not common, but in some cases, the plan participant, or in case of an IRA account owner decides to establish an LLC inside of the qualified retirement plan. So again, if it's an LLC, it falls under that requirement. You must submit the report for that.
Okay, next question is from Ashot. After 70 and a half, is there any mandatory distribution from solo 401k?
Good question, Ashot. If you have a solo 401k plan, a solo 401k plan is subject to required minimum distributions, or RMD. I believe the 70 and a half, that was age in the past. A few years ago, that number actually was increased. I believe now it's 73. You want to double check with your CPA. But if you are at the RMD age, then you are required to take required minimum distribution from your 401k. And one important distinction to understand is if you have an IRA or actually multiple IRAs, you can aggregate your IRAs and let's say you have 3 IRAs. You can combine them all, get the total balance, calculate what the RMD is, and then take the RMD from just one IRA. You don't have to take RMD from each IRA, just from one to satisfy the total. However, if you have IRA and also 401k, a 401k has its own RMD requirements. So you must calculate RMD just for your solo 401k specifically, regardless whether you have other retirement accounts or not. So it's important that you understand and you comply with this requirement.
We have a question from Sam. Please explain the new FinCEN reporting requirement.
Sam, it's pretty much the same question as was just asked earlier. So that FinCEN requirement is a beneficial owner interest report. Again, it doesn't apply specifically to retirement accounts. It applies to any entity that is established with the state. So if you have LLC, corporation, or a partnership, then you must submit this report. Again, this can be your business that is incorporated as an LLC or a corporation, or if you have LLC inside of your IRA or 401k, you must comply with this requirement. We're actually planning on hosting a session specifically on that to clarify some of the questions, but it's really very simple and straightforward. Again, if you have LLC or corporation or a partnership, you must complete this report. And in case of the when it's a business, well, you're the beneficial owner because you own that. In case of an IRA or 401k, you don't directly own the LLC or the LLC is inside of your IRA or inside of your 401k. You don't directly own that. However, you are the beneficial owner because ultimately this is your money. So you will be the beneficial owner of that, and you must complete that report accordingly.
Next question is from Travis. Do you have tax professionals who have experience with working on solo 401k plans?
Travis, good question. You actually don't need a specific a tax professional that is experienced working with the solo 401k. A solo 401k is very straightforward as far as the contributions. Again, there is two contribution components. There is elective deferrals plus the profit sharing. Any CPA should be able to help you with that. There is nothing unique you need to do for your taxes. Contributions to the 401k reported either on your personal taxes for the elective deferral on the Form 1040 or for the profit sharing contributions. Those are reported on your business income, either the Schedule C or on the corporate tax return. Again, very straightforward. There is nothing unique about that, and most CPAs should be able to help you with that.
This question is from John. Can I elect to be taxed as an S Corp on 1099 income tied to the LLC designated for my solo 401k?
John, this is a tax question. So again, I want to make that disclaimer that I'm not a CPA. I don't offer tax advice, but if you do have an LLC, you can elect your LLC to be taxed as an S Corp. That's my understanding, but do confirm that with your CPA.
Okay, this question is from Alex. What are the best and secure routes for self-directed IRA?
So Alex is asking what are the best and secure routes for self-directed IRA. Alex, I will need to clarify your question. What routes are you referring to? Are you talking about investment routes? I'm assuming that's what the question implies here. Well, we can't offer you any investment advice, and a self-directed IRA is designed to help you invest your money. And every investment comes with a risk. So there will be a degree of risk. If you use a regular conventional IRA that is invested in the stock market, you are taking the risk, because the stock market, as you know, is subject to volatility. You can lose money on your investments. When you use self-directed IRA, you have, I believe, much more control over your investments. So you can invest in certain things that you have much more control, such as real estate. Stock market, you can't control the stock market and the outcome, because you're investing in some companies that are run by boards of directors, and you got zero control over that. When you buy a piece of real estate, you have control. Where are you going to buy it? You have control. What kind of improvements you're going to do? What type of rental that's going to be, whether it's going to be a long-term or short-term or maybe a medium-term rental. You have control over what kind of improvements you're going to do on that, and so forth. So, but every investment comes with a risk. As far as secure routes, there are certain investments that are less secure. Other investments are more secure, and I can't really go into that here, but something that you have to research on your own and decide. The bottom line is that you have the ability to invest in virtually anything with your self-directed IRA except collectibles and life insurance. So those are the only two investments that are disallowed by the IRS. In addition to that, you are not allowed to engage in any transaction with your IRA where there is a disqualified person is involved. And disqualified person will be yourself and your immediate family members. But other than that, you have complete freedom. So again, do your research, find the investments that you're comfortable with. I think every investment will have a degree of risk. I guess maybe the only option without a risk is keeping your money at the bank in cash. Well, but that also comes with the risk, because if you're just keeping it in the cash, the cash will be protected, but it's going to lose its purchasing power to inflation. So is that really secured there? Or you can keep your money under your pillow, but again, it's not invested. You can put it in a jar, but hey, there could be a fire and your cash may be lost also. So again, there is risk even in what you might think secure investments. So find something. For me, I personally found that doing private lending or investing in trust deeds is a great way to invest your retirement dollars, or my retirement dollars for me personally, because you're investing in real estate indirectly. On the lender side, you're being a lender, not the owner of the property, and your investment is secured by real property, which even if something goes wrong, you can recover. But you got to find what works for you.
Well, those were all the questions that were submitted ahead of time. So we are going to move into answering questions that were submitted here in the chat. If there are any additional questions, feel free to type them up in that section. But the first question here is from Danny. Which form do I file for solo 401k to the IRS? Do I mail it or file online directly?
Danny, as far as the reporting requirements for the solo 401k, let me explain 3 reporting requirements. There is a form 5500. It's a short form, 5500 EZ, And that form is required if you have a solo 401k and total plan assets exceed $250,000. That's total plan assets. Now, we do recommend submitting this report regardless of the total plan assets. So even if you have under 250, it's a good idea to submit because you get the record established with the IRS. And once you submit, the statute of limitation kicks in. So those are the two reasons we recommend filing that. It's a very simple form. It's only 2 pages. We do help all of our clients complete that form. We have a step-by-step instructions. We tell you how to complete each field. It might take you maybe half hour to complete your first one, and then next year it's literally can be done in about 5 or 10 minutes. So that's number one. Number two, there is a sponsor reporting, and that's something that we're responsible of doing as a document provider. So that's something that we submit to the IRS. We report your plan as active every year. You don't have to worry about that. Again, that's our responsibility as the plan document provider. And finally, when you make contributions to your solo 401k, there are reporting requirements that are part of your tax return. The contributions must be reported on your taxes. The elective deferrals will be reported on your personal tax return on a Form 1040, and the profit sharing contributions will be reported on a form on a Schedule C if you're a sole proprietor or single member LLC, or on a K1 on your corporate tax return, and effectively passed on to you on a K1 if you're filing taxes as a S corp or C corp. So that's what you got to keep in mind. As far as do you have to mail it to the IRS, the Form 5500 EZ can be mailed in, or it can be done electronically as well. You do have an option, and we have instructions for both of those on our on the client portal. And obviously, your taxes can be submitted electronically. That's how most people do it now.
Okay, next question here is from Wayne. When you fill out the application, it uses your information, not the trust information, not quite understanding. And I believe this question was submitted when we were talking about non-recourse loans, if I'm not mistaken.
Yeah, I will need to clarify this question, but when if you're referring to non-recourse financing, that's something that you gotta take to the lender. When you fill out the application, it uses your information. Yeah, because you are applying. You're still the applicant. It's going to be a non-recourse loan to the 401k, but the lender will look at you. They want to see who they're dealing with. They still will ask you for your social security number. They will check your credit report, although the credit report will not be used to determine your ability to qualify for a loan, but they just want to see, hey, what's on your credit report? Do you have a bunch of maybe accounts with different banks that were discharged, that you run up some non-sufficient fund checks, perhaps, or do you have a bunch of foreclosures? And they want to see who is the person behind it. Again, it's not going to be determined. They're not going to, your credit score is not going to matter. Your income is not going to matter. But they just want to see who is the person behind the application. But it will be non-recourse loan to the IRA or to the 401k. You personally will not be responsible for the loan. The property itself will be the only security. Hope that helps. But it's a good question to discuss directly with the lender.
Okay, a question here from May. I think I have some account with you. Can you please tell me what kind of an account and how much? And she did leave some contact information. But any thoughts there?
Well, my I don't think it's an appropriate question for the public Q&A here. You should contact our office directly, and we'll happy to help you with that. But we will take a note of your name and we'll reach out to you. It just answering your question here publicly is not appropriate, so we'll move on to the next one.
Okay, next question is from Brian. I have a solo 401k and purchased a tax lien with money from the account. Problem is when the tax lien redeemed it, deposited the money into another account of mine. How can I correct this on my side?
Well, Brian, if you made an investment, whether it's tax lien or something else, uh, you are responsible for making sure that that investment is made properly. So if your 401k owns the investment, tax lien or otherwise, then it must be clearly identified who the owner is. So it must be vested in the name of your 401k. And when you provide your account information, it must be provided again. Not you can provide your personal checking account for anything related to the 401k. So I'm not sure exactly what happened there. It's probably good to discuss that one-on-one. So reach out to me directly. Let's talk. Let's get a little bit more details about what happened and figure out a way to correct that. There is a way to correct transaction that did not take place correctly in the solo 401k. Cannot do that with an IRA, unfortunately. So if you had an IRA and you accidentally commingle the funds, that will disqualify the entire IRA. So just a warning to you, Brian, and to everyone who's on the call. You got to be responsible for this. This is very serious. Again, your entire account can be in jeopardy if you mess something up. It's not a rocket science, pretty straightforward, but you're responsible. So keep that in mind. Make sure that you're not commingling the funds. And you got to understand that your 401k is not you, and you are not your 401k. Your 401k or IRA is a separate legal entity distinct from you. Cannot commingle those funds. But Brian, reach out. Let's get a little bit more details on your situation and see how that can be fixed.
Okay, next question here is from William. I need to know if the solo 401k um, TIN or the employer EIN goes on the 1096 to remit the total 1099 Rs.
A little bit unclear on the question, William, but I believe you asked that when you submitted the question. If it is related to the 1099-R, on the form 1099-R, the tax ID number of the solo 401k must be the payer. So the payer is the 401k plan, and the 401k plan has tax ID number. Again, happy to go over that with you. Reach out to me directly. We can look at the form together. I can help you clarify that. But it is tax ID number of the 401k that must go on a form 1099-R.
Question from Wayne. Might be a little bit unclear, but I'll still ask it here. So I understand now for a solo 401k, it has to be an LLC or an S Corp, a regular IRA, that is the trust. That is the difference. That is what I have now. Any thoughts there?
Yeah, doesn't make a lot of sense to me, Wayne. So why don't you contact me directly? My direct number is 949-228-9393. You can call me. You can also email me at Dmitriy at SenseFinancial.com. Happy to jump on a call and discuss your question in details, but I need to understand that before I can correctly answer that.
Okay, this question is from Danny. What is the calculation for solo 401k RMD?
That is a tax question as far as the RMD calculation. So there, we do provide some resources online that are you can. There are some RMD calculators. You need to know the value of your 401k, your age, and just plug that in, and it will tell you what the RMD is. We do always recommend that you can confirm the RMD calculation with your CPA, but that's about as much as we can help you. Direct you to the RMD calculator online, or in addition to that, speaking with your CPA.
Another question from William. RMD is not required from the Roth portion of the solo 401k starting in 2024. If you have converted from traditional to Roth, then no RMD is not required. Is this correct?
That is generally correct. You also need to apply the 5-year rule. So the Roth must be in existence for 5 years. So you need to keep that in mind as well. And otherwise, if you had your Roth 401k in place for 5 years, then it will not be subject to RMD.
Okay, next question here is from Jeffrey. Does an IRA owned LLC have to submit the fair market valuation form every January?
The fair market valuation is not for the LLC specifically, but it's actually, I'm sorry, yes, it is for the LLC. If you do have LLC inside of an IRA, then your custodian, as a custodian, they're responsible for reporting value of the IRA to the IRS. And typically, in case of an IRA LLC, the only asset inside of an IRA is the LLC. And custodian doesn't know what the value, because they don't see what investments are inside of the LLC. There could be multiple investments. You could have some cash. So you are required to provide valuation of the LLC to the custodian once a year so that they can submit that required reporting to the IRS. So yes, it is required to submit every January. And normally you will receive a notification from your custodian in December. And we also send the same notification just as a backup to you. It's very simple to complete. Don't ignore that. Your custodian will penalize you for not completing that in a timely manner, but it's very easy to do. So just be prepared for that and submit that as soon as you get that notification.
Okay, this question is from Lane. If I take a non-recourse loan inside my self-directed IRA to buy rental property, what portion of rents do I need to pick up in the current year as income? And what continues to be deferred?
Let me read the question again. If I take a non-recourse loan inside of my self-directed IRA to buy a property, what portion of rents do I need to pick up in the current year as income? Well, if you have an IRA inside, if you own a property inside of an IRA, regardless whether you use leverage or not, this is not your property. IRA owns the property. The income that is received from that particular investment is not your income. If the property is leveraged, then IRA will be responsible for paying the mortgage payments, but none of that income, again, regardless whether the property is leveraged or not, is your income unless you decide to take a distribution from an IRA. So all the income from all of the assets that your IRA owns goes back to the IRA, and it has been sheltered from any taxation. You don't declare that as your income. It's not your income, again, unless you take a distribution from an IRA. Distribution becomes taxable event. Your custodian will report the distribution on a Form 1099-R to you. You will be required to report that on your taxes and pay on your tax return and pay taxes on that amount. But simply rental income from the property that is leveraged inside of an IRA, none of that being taxable. However, one thing that you need to understand is that if you use leverage inside of an IRA, income from leveraged property in an IRA is subject to UBIT tax, because that income is defined as UDFI, unrelated debt finance income, and UDFI inside of an IRA is subject to UBIT, which is unrelated business income tax. So if you do own leveraged real estate, then IRA actually will be will have the tax liability for the UBIT, and that is reported on a Form 990T, but that's for the IRA itself. It's not for you. It's not your taxes. IRA is responsible for it. So be sure to review that with your qualified tax professional.
We have a question here from Ken. What are the investment limits for each plan? In other words, what is the highest allowable annual deposit from income allowable in these plans?
Well, if you have the contribution limits on the IRA is $7,000, and if you're over 50, then you have $1,000 catch up, so the contribution limit goes up to $8,000. If you have a solo 401k, contribution limit is $69,000, and if you're over 50, there is a catch up. So those are the contribution limits. If you the contributions can only be made from your earned income. So for an IRA, you have to have earned income. For a solo 401k, again, this plan is not for everyone. You have to have legitimate self-employment activity or business that generates earned income, and the contributions to a solo 401k are calculated and are based on the net self-employment compensation.
This question's from Elaine. What IRS filings requirements are there for self-directed IRAs?
I think we've gone over that, Elaine, but let me recap. If you have a self-directed IRA, you will be required to report the value of the LLC inside of your IRA to the custodian, or if you have individual investments, then the value of those investments to the custodian, and the custodian actually responsible for that reporting. They do file or submit Form 5498 to the IRS reporting value of the IRA to the IRS. So that's not your responsibility. This is a responsibility of a custodian. And your custodian, again, may request certain information on the value of the investments inside of an IRA. But it is responsibility of the custodian, not you. Your responsibility will be if you own real estate that is leveraged inside of an IRA, then you will be required to file Form 990T, and there will be some UBIT implications, unrelated business income tax.
Okay, next question's from John. If funds are contributed from an LLC that is co-owned, but the only source of income is the custodian's 1099 income, is that considered commingling? If so, is it too late to pull the funds out if within the same month of the same calendar year?
John, I'm sorry, your question is unclear. It doesn't make sense to me. Custodian's 1099 income, that's what do you mean by that? So again, if you're referring to the solo 401k, contributions to the solo 401k must be made from your self-employed earnings. I'm not sure what you mean custodian's 1099 income, so that's unclear to me. So reach out and let's talk.
He did clarify that he meant participant/owner's income. Any additional thoughts there?
Yeah, let's. I want to fully understand the situation there. So, John, why don't you reach out to me and let's talk? Because I'm still
Okay.
unclear.
Yeah. Okay. Question from Ken. When you reach RMD's requirement age, can you roll your RMDs into Roth IRAs to avoid future taxes on the asset gains thereafter?
If you have a self-directed IRA and you're subject to RMD, then you must take the RMD. Now, a way to avoid the RMD is to do the Roth conversion, but there are certain limitations there. You got to have the Roth IRA in place for 5 years, and in order for it to be tax free. So you can't convert the RMD amount. So if you have a traditional IRA, it will be subject to RMD. But if you take your traditional IRA and convert it to a Roth IRA, then Roth IRA will not be subject to RMD. So that's how you can deal with that. But again, the requirement 5 years must be met. So if actually anybody, this is advice that I will give to anybody out there, regardless of your situation. If you don't have a Roth IRA, open a Roth IRA and just fund it with $100, but get that clock ticking, because you never know when you're going to need that. Open Roth IRA, fund it with nominal amount, and have it open. You may need that IRA in the future, and you'll get that clock ticking.
Okay. Looks like those were all of the questions for today, which brings our session to an end. Thank you, everyone, for joining us today. We hope that you'll also join us at our next session, which will be on Monday, March 4th, same time, 11 a.m. Pacific Standard Time. But thank you once again for joining us, and hope you all have a wonderful day.
Thank you, everyone, and have a great rest of the day. Stay dry. It's very wet here in Southern California. Bye-bye.